We have a question. This is Kaplan Kit OTQ question. The question name is fence. Okay. Fence. The first requirement, payback period. Easy one. As we already read the question, so it's very easy for us to solve it. That initial investment at the start of the year is how much? 3.9 million. Better to solve the question in FM. In you can better is better to round off the answer in three zeros, not millions. Okay, so it will be easy. Net operating cash flow is given, scrap value is given, and we can see the life of the year is 4 years because at the end of fourth year, there is a scrap value. Director believes what they are believing that this investment project will increase the shareholder wealth if it achieve a ROCE greater than 15%. The directors are thinking that this project will increase the wealth of the shareholders if the ROCE is going to be 15% or more than 15%. As a matter of policy, the directors required all investment projects to be evaluated using both. This company has a policy to evaluate any project using payback and ROCE methods. Okay, fine. Shareholders have recently criticized the director for using these investment appraisal methods, claiming that Fence Company ought to be using the academically preferred NPV method. Okay, they are arguing, so no problem. Shareholders can never be happy. It's okay. The directors have a remuneration, yani salary. The package of director, yani the easy words, salary of directors is known as remuneration, which you are aware of, which includes a financial reward for achieving an annual return on capital employed greater than 15. Now, directors' return depends on the rows as well. That if the rows is supposed to be 15%, more than 15%, the directors will get what they will get. They will get the bonus or some incentive. There is no share option scheme. They don't have any shares option scheme. What is share option scheme? We will discuss when it will come in the C or D requirement. Okay. First requirement is payback. If you remember, the format we supposed to use for payback is like that: years, cash flow, cumulative cash flow. This three columns, right? When we are investing, it's known as year zero. Year of investment, Isa, is known as year zero. Year one, two, three, four. Okay. Cash flow, first 3,900 was there. We got a return of 1,200 in the first year. Left with how much? We left with 2,700, right? Still negative. Then we got 1,500. We left with how much? Guys,
1,200.
1,200. And we got an inflow of 1,600, resulting that
$400.
we covered up our investment. Alhamdulillah, we got our investment back. That happens where it happens? It happens here, sir. Negative to positive. Negative to positive. Where? In between year 2 and 3. So in between 2 and 3, there is our payback, and investment is returning the, yani this project is returning my investment, right or wrong? So 2 years and some months. So in this way, in the years form, 2 point dash years. This fill in the blanks, I told you a formula. Last negative of the cumulative column, remember? The last negative of the cumulative column, which is 1,200, divided by following. Following, yani very next. Very next what? Very next cash flow, right? Well or wrong? 16.
Right.
The answer is
0.75.
0.75, yani 0.75, 0.75. So after the decimal, after the point, I wrote 75. So the answer, I got 2 marks. MashaAllah. So payback period of this drama, this company is 2.75. Any question?
No, I understand.
Now the problem is B, where they are asking us, they are demanding us to find out rows. Which method? Rows has too many methods. Which method? Average
The
investment.
average method.
Now, first of all, let's go up. Look at the formula of ROCE. Okay, average investment. Where are you? Here I am. So let me paste for you. You need to memorize the formula ASAP. The ROCE formula is, we used to take average annual profit. What? Average annual profit and average investment. They are asking us this formula, no? Not that one, right? And average investment formula is this. So let's solve it. Let me solve it for you. Average annual profit. We need to find out the average annual profit. Am I right? Can you hear me?
Right.
Average annual profit. Okay, not the cash. In this question, the data is for cash flow or for the profit. What it is?
Cash flow.
Cash flow. Okay. We have a formula. We have an understanding already. Cash flow. We supposed to deduct depreciation to find out the profit. Remember or no?
I remember, yes.
Okay. Cash flow. Total cash flow. Total cash flow. If I add all the cash flows, come on.
It's 5,880.
Very nice. So this is 5,880, right?
Yes.
This is my cash flow. Depreciation? What will be the depreciation? The depreciation is easy. You need to find out the depreciable value of the project. The project needs how much? 39.
3.9 million.
And the scrap value which is not going to be depreciated is how much?
100.
So the total depreciation 3900 minus 100 will be 3800. Some students, I don't know why they got confused. They used to do like this. Sir, like this. Ting, 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 divided by the life. Where is the life, sir? The life is 4 years, sir. Okay. I will have 1 year depreciation and then I am going to multiply it with the 4 years and I am getting the same answer. Allahu Akbar. Allahu Akbar. Do like this or use a bit small knowledge of FR that the depreciable amount is supposed to be the total depreciation and the depreciable amount is the cost minus scrap value. Right? Well or wrong?
Right.
You do like this, long way, goes to Bahrain, then comes to KSA, or direct go to KSA, bhai. What is the problem? Take direct flight. Why you are going in direct flight here and there and here? No need. Depreciable value, depreciable value is going to be the total depreciation, so you can take it directly. You will have your profit for the year, which is supposed to be
It'll be 2,000.
2000 total profit, right or wrong?
Wait, sorry, it'll be 2,080.
2080. This is my total profit, right? Now be careful. My formula is
Right.
suggesting annual. So average annual. So what to do? This 2080 is for how many years? For 4 years, right?
4 years.
So average annual divided by 4, so 500 and
520.
520. Now I need to divide it, multiply 100 to get the answer. I need to divide it with the average investment. Average investment is initial investment, which is 3,900 plus scrap value, which is 100 divided by 2. How much?
2,000.
2,000. So my rose is rose, not Rolls Royce, it's rose. How much? My favorite number.
25%.
25 point.
It's 26%.
26%. Halas. Are we clear?
Yes.
Okay, so the answer 26%. 4 marks out of 10 we earned till now. In the beginning of the syllabus, I told you FM is a theory. 60% theory, 40% calculation. So 2 questions we are done calculation. Now remaining 3 will be theory, and theory. Now, 2 of the following statements about investment appraisal methods are correct. Okay, right or wrong? Can you read for me A? Can you read A?
The return on capital employed method considers the time value of money.
Okay, you have 2 formulas in FM for return on capital employed and 1 formula we learned of FR, right? Did we consider the present value
Right.
for this type of drama? Wallahi, we never did. Correct?
Right.
So, return on capital employed never consider the time value of money. Otherwise, you will see the present value working in this thing. But we never found it. So, Rose is not considering the time value of money. B. B for boy. Can you read B?
Return on capital employed must be greater than the cost of equity if a project is to be accepted.
Did I ever told you this?
No.
We will never consider rows with cost of equity. Never. We consider rows as per the targeted rows, which is made by the management, the target by management. We are comparing rows to what? To what? To targeted rows only. Cost of equity have time value of money in it. Cost of capital considers the time value of money. And rows never consider time value of money, so we cannot compare them. So B is also a wrong answer. So if starting two are wrong, so definitely C and D are correct answers, and that's my answer. But why? Read the C, please.
Riskier projects should be evaluated with shorter payback periods.
Yani they are saying that if a project is risky, means it has a long payback. And if a project it has a less payback, it's less risky. Okay. Yani what is payback? When my investment will be recovered. So tell me, we Pakistanis, right? Indians, right? Nepalis, right? Asians, right? We have a mindset. The project is good if my investment comes back to me as early as, right, well or wrong. We are short tempered peoples. We are who we are, who we are. We are short tempered peoples. We consider jaldi jaldi, yani fast fast, sura sura. Money must come back. So yes, it's correct. Riskier project, not riskier project. If project has less short payback, it's less risky. And we are getting our money back early. Okay. Next one. Payback,
Payback.
ignore the time value of money. Payback, we already solved the payback many times. There's this. We never, we never considered the time value of money while calculating the payback. So payback is not considering the time value of money. Now 3 questions we just completed. Now the next question is, let me share with you. There are 2 more. Coming up. Now the D one is, which of the following statement is are correct? So let's see. The first one, management reward, is this this relates to this thing here, that the management, the roles, if roles is going to be achieved, the managers are going to get the bonus or something, some incentive. There are no cash scheme. Okay, here's the scheme. Manager reward is scheme of a company should encourage the achievement of stakeholder objective. Yes. Who made the who made the targeted rows greater than 15%? This is who? This is who?
The managers?
The shareholders. This is the objective of a company, no? Objective of a company
Right, right.
will accept only this. Increase the shareholder wealth is the main objective of a company. And increase in the shareholder wealth will be achieved if the ROCE is greater than 15%. So shareholder wealth, increase in the shareholder wealth is the main objective of directors. Yes, it is. Then required investment project, it will be evaluated with return on capital employed. Example of dysfunctional behavior encouraged by performance related pay. Dysfunctional behavior, FBT. Dysfunctional behavior in FBT, it is that managers are acting in their favor only, not in the favor of the company. Yes, if their roles is, if their performance, their things are concerned relates to the roles, they will definitely encourage, they will manipulate, they will do something, so they will get the benefit, higher benefits. So this is also correct. And has a agency problem, as the directors are not acting to maximize the wealth of the shareholder. Directors bonus relates with the roles. So directors are not working to maximize the wealth of the shareholders. Here, directors are working to get their bonus or their increment. Rose is secondary thing for them. Their Yes, can you hear me now?
Yes.
Now the thing is, uh, option three is also right. So the thing is, we have answered the final answer for this one is D, right? One, two, and three, correct?
Right.
Next one, which of the following statement about fence company's director remuneration package is correct? Okay, let's see which option is correct or which option is wrong. Okay, so which one do you think? Hmm?
Option number B.
Let's see now. Number one, director remuneration should be determined by senior executive directors. Director remuneration should be determined by senior executive directors. Let's go to FBT. FBT, remember this was your very first paper when you joined ACCA? Yeah.
Right.
In there was something called corporate governance. Remember?
Yeah.
Little, sir, I remember. Okay, no problem. Corporate governance states that remuneration package of executive directors supposed to be determined by NEDs. Oh, Allah. Remember NED? Non-executive
Non-executive.
directors. So, okay. That's why one is wrong. Look, the FBT knowledge got examined in FM, and this is the past paper which we are solving. So one is right or wrong now?
It's wrong.
Now be technical, little bit technical. One is wrong now. So my B cannot be the answer. D cannot be the answer. I can make like this. So it's helpful, right? Some jugaad, some small tricks. Now A and C. Only we are left with A and C. Let's read point number 2, what it is. Introducing a shares option scheme would help bring directors' objective in line with the shareholder objective. Shares option. Share option means that if company will achieve a target, director will get the shares in the company. Yani director will be the shareholders in the company. Okay. So if directors will be the shareholders, they are supposed to be the owner. Same like other shareholders. So the objectives are in line, right or wrong?
Right.
3. Linking financial reward to a target ROCE will encourage short-term profitability and discourage capital investment. You are right. Why right? Please look, I am explaining. There is rows now. Let's suppose profit is 10,000. This is profit and this is investment. Let's suppose investment is 100,000. Answer is how much? 10%, right?
Yes.
Okay. If I withdraw the investment, let's say 80,000 and profit will remain same. It's a maths, no? It's a mathematical relationship. Tell me what is the answer coming up now. It will increase
It's 12.5%.
12.5%. And if I say profit is this and more investors came in and they want to put more money in the company, is going to be
It will be 9%.
oh, what is happening? Because of mathematical relationship, if investment will increase, the rows will decrease. So rows, if rows is your final baseline target, the director will never allow any person to bring the money in the company. Why? Lesh, you, because of the maths. If more investment will come in the company, the rows will decline, and rows is the bread and butter for the director of Fench Limited or Fench Company, because their bonus, their increment depends or link or associated with the rows. So they will not bring any money and they will try to increase profit because numerator, simple maths. If numerator will increase, the answer will increase. If denominator will increase, the answer will decrease. Right? Well, wrong.
Right.
So this is also correct. Answer is C for cat. Am I right or am I wrong?
You're right.
So bihamdi ta'ala, we just completed chapter 3 with the Kaplan Kit, and that's the OTQ 10 marks question on chapter 3 of Study Hub. Inshallah, next class we will start the discounting techniques, interest, and other things. Okay.